Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is Akiba Leisman. He's the CEO of Mako Mining. And it just occurred to me that I don't know if I got his last name right, but I tried to get his first name right. So this is a pre-production sweet spot story. That's one of my favorite type of junior resource plays. Got it on my radar. But I've got questions. But Akiba, why don't you go ahead and give us an overview for what you're doing, and then we'll get into my Q&A.
All right, perfect. So the way that I like to describe Mako Mining is that we're doing three things in northern Nicaragua. First and foremost, we are building what will be the highest grade open pit mine in the world. We are going to be turning that on imminently. So we're expecting first gold pour to happen sometime in the next 72 hours. Not commercial production. Commercial production in early Q2 at the initial setting of our mill and plant at 500 tons per day. But this is really just to get started on the other two objectives, which frankly I think is more important than the first. So secondarily, we made a discovery a couple of kilometers to the south of the deposit that we're mining right now. So the deposit that we're mining right now is called San Albino. The area to the south is called Las Conchitas. And the objective for this calendar year, once the mine is in cash flow, and then even early in 2022, is to integrate that as an additional deposit that we intend to mine at the very, very end of 2022 at 1,000 tons a day. So doubling production from where we intend to be imminently. And then thirdly, and probably most importantly, is that we do think that we're sitting on an orogenic gold mining camp in Nicaragua, in this part of the country, which is very different from other geologies that you find elsewhere in this part of Central America. And really, once that mine turns on, we'll have the ability to go and systematically explore what's now 188 square kilometer land package in a highly prospective orogenic gold mining in what we think is a district.
Okay, well, that's an excellent overview, and I do get the significance of orogenic. We'll come back to that. But actually, before we get to the projects and your goals, let's talk about Nicaragua a little bit. Things do seem fairly calm there. Other players have been able to make out well there recently. But it's still worrisome. It wasn't that long ago where there was protests in the streets. It seemed like another Latin Spring country in the making, the Ortegas. Actually, I've been to Nicaragua. I should say I've done man on the street interviews, and my sense was that the average Joe wasn't particularly pro-mining, but they knew that the Ortegas wanted mining to happen, therefore mining was going to happen. So that leaves the question of, what happens if there's big political change in Nicaragua, and how do you manage country risk down there? And sorry to put you on the spot, but this is, I think, for people to if they can't wrap their minds around Nicaragua, nothing else you say matters.
No, 100%. We're a Nicaraguan company, so you are by definition taking on Nicaraguan risk. The way that I would characterize it is probably the biggest risk of Nicaragua is the fact that it's a small country. So it doesn't take a lot of changes to affect differences in government and things of the sort. Now, and especially in an environment like we've gone through between 2018, 2019, and now at the global pandemic, there has been a lot of catalysts for change around the world. That's not even Nicaragua directly. So small countries, almost by definition, will imply a higher degree of volatility. I think that's an accepted risk for where we are. In terms of our experience over in Nicaragua, both in the iteration of Mako and its predecessors, where we've been operating in the country since 2009, and then me personally, I've been involved with the country since 2014. It's been great. I truly great. I mean, we're in the process of shutting down a mine, or we've shut down a mine in Mexico, and in the process of selling it to another third-party group. Mexico is difficult to operate in. There are some positive attributes for Mexico, but Nicaragua, we never have to worry about personal security. One of the benefits of dealing with a small country is that you do have direct access to your regulators. So if we ever need to have a direct discussion about things that are going to be beneficial to the project, to the environment, there is an ability to reduce bureaucracy and get things done in a fairly quick fashion, which is kind of proof in point of us being able to build and deliver a mine for all intents and purposes on time and on budget in the middle of one of the most challenging environments to do just that. So I've been very pleased about our operations in Nicaragua. The people are great. I've been positively surprised about the skilled labor access to that in the state of Nueva Segovia, and certainly from the capital of Managua. So there's a lot of well-educated people and highly skilled people that we can seamlessly employ and run our mining operations. We have over 400 people working for us right now. So Nicaragua's been fantastic. I have no complaints.
All right. Well, I can't pin the future on you. I have to say I worry about regime change more than anything else. I get that it's been pro-mining. I mean, just look at what B2 has done and what Calibre has done, or Calibre, if you will. Clearly, you can operate there now. My question is a forward-looking statement kind of question, and I won't put your feet to the fire on that. But good answers. Interesting to know how your experience has been. Okay, so let's talk about your project, and let's talk about what you're doing right now. I get the vision for the future, but I got to tell you, one of the things that has been like my worst experience as a resource stock speculator has been betting on companies that build a mine without a full feasibility study. And I get that this is a small, easy to comprehend, low capex project, but there's a reason for feasibility studies, and there can be surprises. And you think it'll be easy. It's right there. We just trench it and put it on the leach pad. But how do you know that something's not going to come and bite you on the posterior here if you haven't done a full study?
Oh, sure. So first of all, we fully believe in 43101 requirements, and actually there's a lot of good quality reasons for why you actually want to go through the multi-stage process of going from a resource to a preliminary economic assessment to a pre-feasibility study to a feasibility study. But you do need to look at the context and the history of what Mako is to decide for yourselves as to whether what we've done was sensible. So Mako and its predecessor was a company called Golden Rain Resources. So they picked up this property in 2009. Made the initial rediscovery. This was a mining area that was known about as early as the 1920s in a commercial fashion, and then even historically in the times of the Spanish from the late 18th century. That exploration discovery served as the basis for an initial resource that came out in 2012, and that was updated as a resource in 2015, along with a preliminary economic assessment. So there was actually an economic study done and a resource that was done with it. There were significant issues with that resource. I don't think anybody was trying to do any funny business over there. But some of the decisions that were made into the establishment of the 2015 resource were such that it was not a good representation of the underlying geology, and we can get into the specifics of that a little bit later. And then it certainly was not conducive for a real mining plan. Now, our predecessor over at Golden Rain decided to build that project on the base of what we consider to be a flawed resource and preliminary economic assessment. And what they did was they decided to take some non-equity financing in order to do that from a royalty company called Sailfish Royalty Corp, which was a company that I created. That royalty stream that was put on that asset basically put Golden Rain down a path where it was going to be very difficult for them to access forms of equity capital to de-risk the project, to go through that multi-stage process that you will. The reason why that happened is that I wanted to have the other company that I was involved with, Marlin Gold Mining, to merge with Golden Rain. In fact, we eventually were able to facilitate that transaction at the end of 2018. I didn't quite realize it was going to take 4 years of negotiation to do that. So this was not exactly the right chart from a timing perspective on how this was handled. But really, it was my objective from 2014 to bring those two companies together. But during that intervening period of 4 years, there was a lot of promises that were made to the local community and to the government about getting this mine up and running especially when they received the permit to go and build this asset in late 2017. So the merger was facilitated. We created, as part of that, the royalty stream got torn up, so it gave some flexibility for the new Mako to receive, whether it's external capital, and to advance the project on an unencumbered way. But both sides, ourselves from Marlin and the other side, Golden Rain, understood that the resource that was put together in 2012/2015 was not conducive to building a mine. Now, I took over initially as interim CEO in March of 2019, permanent CEO in August of 2019. The very first thing that I did is made sure that our guys had a better understanding of what the internal geological model was all about. So at a high level, what wound up happening is that we have a series of narrow veins, and by narrow I mean about 1.25 meters, but extremely high grade. So extremely high grade, the average vein is about a half-ounce material, 15, 16, 17 grams, but across these narrow zones. Now there's a lower grade halo around this on the hanging wall and foot wall that winds up, you can see it, it's mineralized, but it's pretty low grade. The old resource in 2015 basically took everything as a single unit and blended everything together. So that had the approach of taking the grade of the deposit down, and then more importantly, without putting actual real hard structural controls and geostatistical controls on how you were estimating grade, it wound up overstating the ounces in the model. And we knew about that. So in 2019, in the early part of 2020, our guys were able to redo the geological model that served as a basis for how we intended to mine it. Now, as soon as that geological model was done internally, we gave that to what we consider to be the best quality resource estimator in the industry, a group called Mine Development Associates, led by Stephen Ristorcelli. Truly, anybody who has any technical knowledge, or people that are involved in the resource estimation part of the universe, know that this is the A team, if you will, for resource delineation. And they were able to take our geological model and refine it to what we can actually build a real mining plan on. So the other aspect of the history of this company is that when the initial capital was raised to build the mine and basically adhere to the commitments that we made to the government of Nicaragua and the local community. In fact, one of the first things that I did when I took over as full-time CEO was go down to Nicaragua, shake the hands of the mine minister, and tell him that all the promises that were made prior to my involvement with this company may not have been adhered to, but when I have a commitment to build this mine, rest assured I will be building it. And whether that is going to be in a normal environment or in the middle of one of the most challenging environments for the mining industry, the global pandemic over here. So we kind of knew where the numbers were going to be at the time where construction was made. Our group that we have, our key operating team, which I onboarded from the Marlin side of the business, are really, really good operators. They know how to build small, medium-scale mines in the Americas. They've operated in Central America and Nicaragua before in their careers. They're excellent mine builders. So we were not too concerned about the engineering of the plant, the overall capital needs for the project. We had a good handle on it. But we were not going to be starting this mine until we actually had a handle on the underlying geology. And MDA delivered a product that is actually predictable. And we've actually started mining the high grade of the deposit. We've mined 2.5 benches. The model is holding up great, positively reconciling on grade, like we said we would when the resource came out. So from a
actually, I was going to ask you about that later, but let me jump in. I've seen those reports. You've got these press releases about the benches and the gold contained, down to single digits on the ounces contained. But you haven't processed it. You haven't got the gold out. So I mean, that's an estimate. I mean, I've never seen that before. Here we have 12,152 ounces, like 2, not 3, not 1. How can you say that?
Sure. So what we're actually doing with those bench reconciliations, and by the way, we're not going to be going through this process for the entire bit of the mine. We actually have, when we actually process the gold, we have sampling mechanisms at the crusher where we can take real-time data after it goes into the front end of the plant. So these last 3 press releases that we put out with respect to how we're calculating grade within the benches is going to be unique for this environment, the pre-production environment that you're talking about right now. But what we were actually doing over there, the way that we're calculating grade within the benches itself, is that we're taking samples every 4 meters, geologist-controlled sample with a saw, or in certain locations with a rock hammer, taking samples every 4 meters in channel, right? So you're doing this in the host rock, the hanging wall, vein, footwall, and host rock, sampling it down that channel sample with geological interpretations of all of them. And then, you know what we're actually doing with that? We're doing the same approach on how we calculated the resource. So all of the modeling with geological controls, all of the capping mechanisms that we have to eliminate any outliers in our statistical model are actually being estimated through those 4 meter spacings. So what we have for that first 2.5 benches is basically the equivalent of a localized resource estimate using 4 meter effective drill spacing. So that would be the net equivalent to that. But to your first point is that you don't know until you know. 100%, right? So this has to go through the plant. We have to recover it, and then investors will have a full understanding in terms of what the reported grade is when it's coming through the initial crusher, and then what the recoveries are when we refine it in our refinery.
Okay. Sorry, I interrupted. We were basically wrapping up the feasibility study question, and the answer is, the summary would be, based on previous commitments, it was incumbent on the company to go ahead and get it done. You had the confidence based on the new model to just go ahead and do it, rather than wait for a couple more years of feasibility work and potentially cause in-country problems. Is that how it works?
Yes, certainly there were social and social aspects about that, both local as well as countrywide. I do think it is fair that we had an understanding about what the economics of this project would look like, at least in the first stage of it, to enough where we knew it was going to work, and then it was just a question about refining the actual model and plan before we actually got comfort to actually start mining this thing. But even from a broader perspective, we started about talking about the over at Mako earlier, right? So this is really not about building a 500 ton per day operating plant. This is about getting something up and running so we can achieve the more important objectives, which is to see if we can actually be mining this at what I would consider to be a globally relevant scale. So at 1,000 tons a day, if the grades hold up, that would equate to 75 to 90,000 ounces. Obviously, it's early days to determine that, but somewhere along those lines. And then to prove that this is an orogenic camp where we can feed that mill really for a reasonable amount of mine life associated with that. So our approach to doing this in stages, certainly 100% there was a social element to that. There's also an economic element. And this is kind of one of the debates that we get into with people that criticize what we do or even accept what we do for that matter. And they're entirely valid criticisms or even on the other side, cheerleading aspects associated with this, is that when we build that mine, so soup to nuts, everything associated with San Albino is going to cost us around $37 million. It's about 28.8 for the plant delivered. The infill program, everything that goes with this, working capital associated with operating in Nicaragua, everything that we did associated with that initial 500 ton per day facility from the day that I took over as full-time CEO, it's going to wind up costing us about $28.8 million, which I think the original budget that we scheduled for this was about 28 million. So in the context of a global pandemic, 2 major hurricanes hitting our site, I'm actually ecstatic about the fact that this is coming in at 28.8 million bucks. But then once we have that plant up and running and everything is working, and this is kind of where we have this debate going on in the mining investment community. From our perspective, is that once we actually have a plant that can run at 500 tons a day and be easily expanded to 1,000 tons a day, it means every single other ounce that we find on the property that's not in our current resource instantaneously becomes worth more, right? So we find a pocket.
It increases the ROI already done.
And it also increases the probability of you being able to economically extract those ounces because you no longer have to go over the hurdle rate of building the project the first time around. So we're actually going to be going through an economic study at 1,000 tons a day, the kind of the project that we think this is going to wind up being, but it's going to require getting, at the very least, truly at the very least, a second deposit in its plans. And then to eventually look.
Right. I thought you already got the permits to go to 1,000 tons a day.
Right. We have the permits to go to 1,000 tons a day and to operate the plant and the tailings, but we actually need to have a completely separate mining area in order to mine at 1,000 tons a day.
And a well-studied area. Okay, I'll vote for that. Right. But does that put you under new time pressures? If the government went and gave you permits, are they thinking, okay, well, so maybe next year? Or do you have time to drill off Conchitas and put a proper study on it, or how does that balance out?
Sure. There's a lot of aspects about Mako that effectively puts us on a hamster wheel, right? So no question about it. But frankly, I like operating that way. I like kind of running it at full speed. So the objective of and let's just go back to what I mean by needing a new mining phase. We have a very, very selective approach to mining from an open pit perspective. So given that the fact that the average width of the vein is about 1.25 meters, we're actually mining this at 3-meter half benches. We need, at those kinds of widths, 3 separate mining faces to be effectively mining 500 tons a day of mineralized material to feed the plant. It's going to be impossible to have 6 mining faces over at San Albino, just in terms of where we are, logistical constraints and things like that. You need to find a completely separate mine to be mining at 1,000 tons a day.
And sorry, just to be clear on that, the resource at San Albino, it's pretty well understood that it is what it is. It's not open on strike. I mean,
completely open on strike.
Because if if it was wide open in one direction, you wouldn't want to say never, right? You'd want to be able to step out in that direction and keep mining, wouldn't you?
Oh, this is we mentioned in the resource update. This is completely open along strike and down dip. These veins, I've heard criticisms about San Albino that somehow the veins are quote unquote erratic. They're not. They actually hold together really, really nicely from a geological perspective, and we're able to model that. Yeah, they do pinch and swell in certain locations. They do boudinage in certain locations. So yes, there are aspects about it where it presents challenges that we're overcoming right now on how to selectively mine it. But these things are continuous. Down dip, you can measure the continuity truly in kilometers, and then along strike, you can basically show the strike extent also in kilometers. But we do have a lot of faulting in certain areas. So the 2015.
So it's not like you can just keep drilling in that direction. It requires some exploration and figuring out to see where the extension is. Is that right?
Sure. So the 2015 PEA had 4 separate pits. So obviously there was gold in all of them to even have a low quality resource and estimate and a preliminary economic assessment. We only focused on 2 of them for the MDA model. So it's the west pit and the central pit. But the southwest pit, the northeast pit, there's gold. I mean, we're drilling there literally right now. There's going to be additional ounces, open pittable ounces over at San Albino imminently, right? So there's clearly gold. It just needs to be drilled out, and we did not drill it out to the level of specifications that we require in order to put our stamp of approval and MDA's stamp of approval on a resource estimate. And likewise, from an underground perspective, I have every bit of confidence that this is going to be eventually an economic underground mine, but we really haven't done a lot of work to do the infill work primarily, and then the underground engineering.
That was another question I had. I can see that you've got this high grade right at surface, just freaking take it, right? But it is pretty narrow for underground mining. It's, 1.25 meters. I get that orogenic means that it's not like an epithermal with a known vertical component unless you have multi-phase. So the long dimension could easily be down, but at those widths, how far down can you go? And does underground mining even make sense below the pit at those widths?
It's early days, so no question we have to do a lot of work to determine that. It's kind of interesting in terms of how the resource was put together. So when we put out that 9.56 grams in the open pit, that's what we call a fully diluted number, and I'll explain what fully diluted means in a second. The underground component was actually in the mid 10 gram range, and that was delineated on a block. Actually, I think it was over 11 grams. That was delineated on a block diluted a number. So the grades have an initial level of dilution associated with that. On the open pit, we actually expect the post-mine grades to be higher than what was being estimated, just because of our ability to control mining dilution better than what was being estimated. Just because of
sorry, I assume the mineralization is pretty visual. Like as you're going down the pit, you can see where the high grade is, and you can say, okay, ore bin, waste dump.
Yeah, right. So we have 4 separate layers of grade control. Frankly, having gone through this exercise over the last 6 months, if we didn't have clear-cut visual separation, we would be very, very challenged in what we're doing. So we are fortunate that there's excellent visual separation. And I'll go over some of those mining techniques in a bit. Going back to the underground, I do think that there's going to be some logistical constraints where that 10.5 block diluted grade will eventually have to come down as well on a practical level of dilution. Obviously, it's early days to determine this, but right now the optimization will always be how tight can you get your stopes, how small can you get your equipment, how much productivity that you can get there. But that being said, yes, we diluted a 16 gram vein down to 10 or 11 grams in the underground, and yes, that might be diluted further in a reasonable stope to, let's say, 7 or 8 grams thereabouts. Guess what? 7 or 8 grams for an underground mine is still pretty damn good for the depths that we're going on a fully diluted basis. So.
Okay.
Now for the open pit, and this kind of becomes important both in terms of the geological model and then practically speaking in terms of what we're doing. Like I said, we have a shallow dipping ore body, narrow vein, on average 1.25 meters. Sometimes it's really narrow, like where we're mining right now, about 0.7 meters wide. And then towards the end of the year in Q4, we're going to open up a zone called the Porcelana zone, where the actual widths of the vein go out to about 2.5, maybe even 3 meters, like almost a full width of a half bench. Now, the way that the resource was modeled was to mimic how we're mining this. So the way that the resource was modeled, it was modeling the vein, and then applying a half meter, so 50 centimeter level of dilution on top and below. So practically speaking, if the average vein was 1.25 meter, we expanded that zone to 2.25 meters, half above, half below. What we're mining right now to mimic that is that our geologists visually, when we open up the bench, can actually see the vein. We'll mark it, there's 4 levels of grade control. There's the drill program that went into the resource model. There are blast holes when we're opening it up that will be a reasonable proxy for geology, but not very good for grade estimation. There'll be the channel samples, which are excellent at grade estimation when it comes to reconciling to the model, and then eventually the various belt samplers that we have over at the plant. And then we have the visual separation over here. So what our geologists are going to be doing is that we're going to be telling an excavator operator to scoop off layers of the hanging wall, expose the vein, try to take as little dilution as possible, but make sure you get the entirety of the vein, get to the contact point with the footwall. And that's what we're doing right now. And we are mining tighter than 50 centimeter tolerances on either side, which means by definition, the grade of the deposit will positively reconcile to the model, because the constraint of that model was to apply a 50 centimeter dilution. Everything else about the vein.
We probably don't want to go too far down this rabbit hole, but just curious. I love the geology. Is there a significant difference in the hardness of the rocks, such that, not exactly resuming, but can your backhoe just kind of scrape off the hanging wall and leave the higher grade portion there because it cleaves off, or is it just visual? You have to stop before you get too close.
So we're fortunate. We actually surprised some of, we surprised some of our mining engineers. They went down to, or the geologists surprised some of the mining engineers when they went down to see a post-blasted bench, and they basically didn't believe that it was blasted, right? Because everything was pretty much intact, and you can see it. So yeah, no, we're fortunate. We only did free dig on some of the maybe one or two benches on some of the pre-strip over here. So everything here has been drilled and blasted. There's probably about a 30 meter wide on average oxide layer. And then when we're in the fresh material, frankly, all of this stuff becomes better and more competent. So even on a post-blasting perspective, you'll be able to visually see the separation between the host hanging vein, footwall, and host rock.
All right. Well, okay, we've gotten a little bit more down into the weeds than I intended to, but I just find this really interesting. So let's get back to your plan here. You've got the immediate resource at San Albino, which is quite modest, doesn't really pass the go big or go home test, but it's a starter. I get that.
Right.
The immediate growth, is it these strike extensions or depth extensions where you're at now, or is it at the Conchitas area, or farther afield at Potreros, or what comes next here?
Right. So we currently have one rig operating on from a mission point of view over at Las Conchitas. There's 9 advanced targets over there. We only focused on 3 of them, getting it to about, I would say on average, 50 meter spacing. So still not tight enough relative to some deposits are fine to do 50 meter spacings. Ours is not, right? So you need to get that infill before you have a deposit. And then, so the primary objective of 2021 is that we're working out the final details of a budget, but everything is kind of honing in on about somewhere between an $8.5 million exploration budget to focus on 3 things, right? So one is going to be, I guess, 3 general areas of our concessions. So there's Las Conchitas. So we're going to actually start infilling those 3 targets that we've drilled for the last year and a half with a single rig. Likewise, we're actually going to be looking at the other 6 targets as well. So Las Conchitas, let's say our program is going to be somewhere between 50 and 55,000 meters for the calendar year. Las Conchitas will probably take half of that, thereabouts. It's kind of rough estimates at this point.
And that'll lead to a maiden resource estimate?
Yeah, probably in 2022 will lead to a maiden resource estimate at those 3 targets. I think it's going to still be a little bit early to encapsulate the other 6, which are in my minds, I think are clearly at some point going to be additional satellite deposits as well. But specifically on the 3 areas that we have, the Mango Zone, the Bayakun Zone, and the Las Dolores Zone, we'll string together as a maiden resource in the first half of 2020.
Is there a corporate goal for that? Like, yeah. I'm inviting you to wave your arms and make a forward-looking statement here. I don't want to get you in trouble, but if an objection now is it doesn't pass the go big or go home test, we need to know how much bigger is this next bit going to be added.
Yeah, so there's 2 aspects of this. Is like, what do we actually think is there, and what can we actually delineate in a resource, right? So let's start with the latter bit. A useful analog, I started talking about this 5 or 6 months ago, and I actually think it's valid, is that effectively what we're doing here is we have a narrow vein underground mine that happens to be tilted on its side so we can mine the first 100 or so meters through an open pit fashion. And when you're doing some resource delineation work over here, everything that goes into the resource estimation for narrow grain underground mines applies to us, right? So we actually have to have a reasonable level of, a pretty significant level of drilling density for us to have a resource that we feel comfortable with. So using San Albino as an analog, that was only delineated on 230 meters of strike and about 350 meters of dip. So that's the area of the vein or the 2 veins that I guess there was technically 4 veins over there, but 2 primary veins over at San Albino that made up the vast majority of those resource ounces. From inception, if you look at core and one RC program that was done as well, there's 90,000 meters in the program for an area that's 230 by 350 by 1.25 meters, obviously, roughly speaking, in terms of volume over here. That's a lot of drilling for that kind of space. So we are always going to be having a relatively short delineated mine life just because of that is required in order to delineate ounces that we feel comfortable having controls over the model, and then eventually our ability to estimate, and then eventually our ability to mine it. That is a very, very different question. That how many ounces do we think are there open pittable in areas that we can see, touch, and smell, and then what is the actual potential in the overall land package. I publicly stated that from an open pittable ounce perspective, I do think that there's going to be in the low 1 million ounces when all is said and done at San Albino, Las Conchitas, the 9 targets, the El Golfo area, everything tucked away in this part of the deposit, and then the Puerto Rios zone on the west side of the El Jicaro River, and then the underground potential we don't really have a great handle on right now, but if we can prove that underground is economic, you can basically increase those ounces by a pretty substantial factor. And that's not even including the regional aspects. So the stuff to the northeast on the other side of the river, there's not a single drill hole in it. So it's kind of a little bit early days to even be arm waving. But certainly this geology is permissive to find gold inventories that would achieve your objective of going big.
Okay. So do you either have the money left in the bank after the construction, or does San Albino throw off enough cash to pay for all this exploration? You mentioned $8 million of drilling or so. Do you have that, or will have that, or will you need to raise more money?
Right. So the discussions with the board were you have $8 to $8.5 million to have a program, provided that the mine works. Right. So that's a pretty major caveat. Right. So the objective over here was to get the 500 ton per day mining operation up and running in order for us to use the cash flows to explore elsewhere. So to get the company to the point that it is right now, from the time that I took over initially as interim CEO, we raised an aggregate of US $55 million, right? So US $55 million was in the form of 2 tranches of $20 million in equity, so 40 in equity, and then $15 million in unsecured debt. The equity raises were led by the controlling shareholder, which we didn't even discuss, a private equity and hedge fund group called Wexford Capital out of the United States. They're a 56% owner. They took a little over 70% of the first equity deal. They took 100% of the debt deal, and they took about 60% of the second equity deal. So they were the big mama, if you will, in back of the financing that got us to the $55 million. Now, I said everything associated with San Albino took $37 million. Everything in Nicaragua associated with a 500 ton per day facility. That doesn't include the exploration drilling for the last year and a half over at Las Conchitas, which right now, as of today, is probably pushing somewhere in the neighborhood of about $6.5 million in its own right. So right now you're approaching $44 million. There was 2 years of G&A at the overall company running at about 2.5 a year. It's not just from my salary. There's plenty of offices and individual people that we have to pay for that G&A. So that's another $5 million that gets us to about 50. And then there was a liability that we had over in Mexico that we needed to deal with in the amount of about $5 million. So that's kind of where the use of proceeds for that $55 million facility is. So we have one of 2 choices. We can either seriously tighten our belt right now, wait for the mine to be in cash flow, let's say in early Q2, so 2 to 3 months from now, then get an exploration program up and running towards the middle of Q2, or we can take a credit facility which would have no equity, no warrants, no hedging, no nothing associated with it to accelerate those plans. And we are evaluating that. So it's really a choice.
Sorry, why would it have to be Q2? I mean, I get that commercial production takes a while after first pour, but once you pour that gold bar, you're not just sit there and look at it. You're going to sell it. So I mean, wouldn't it start generating cash flow sooner than Q2?
Right. So this is a good point to discuss the ramp up, right? So we've always said that we were going to, I guess when we put out the last schedule right before the financing in June of last year, said we were going to pour gold in January, right, and commercial production in early Q2. After that time, we were hit by 2 major hurricanes overhead to the ground. So whatever buffer I had on that calendar objective got eaten by the gods, if you will. So we are going to pour gold in January. It might be January 31st, but we are going to be pouring gold in January, and it's going to be a tiny amount. So, and this is going to be important from the respect of cash flow and the. We have a coarse gold deposit. Now, we happen to have a very special type of coarse gold deposit where everything is pretty fine grained, and we have a discernible nugget effect on how we're modeling the resource. So that part's good. But the practical implication of having a coarse gold deposit is that you do not want to screw things up with a coarse gold deposit in your initial ramp up. So going through the mill, right? If you have little flakes of gold, that's going to get inside the liner. The next time that you're going to see that gold is going to be when those liners are replaced over in the mill. Likewise, if anything comes out of the gravity circuit where not everything is working up to pace, if that coarse gold is going into those carbon and leach tanks, you're going to be losing some recovery for a whole host of reasons over there. So we are going to be very careful about ramping up production, not with the 9.56 on average as far as the resource gram.
You've got some low-grade material to do your commissioning with.
Exactly. So we're not going to be cash flow positive till we get to approximately 3 grams, let's say at the mill site. We're not really anticipating that happening until the very end of March. So this really will be a decision. You either do it now, or you're going to have to wait 4 or 5 months, which is really why there's a rule made about whether you'd want to take a short-term credit facility with no bells or whistles.
Okay, understood. Okay, I get that. That makes sense. Okay, so let's try to summarize here. We've been going for 40 minutes. I don't want to presume too much on your time, but we've got first pour imminent. We're going to show proof of concept if nothing else. It's going to be a while before commercial production, but so the deliverables are just proof of concept. It's working. The gold is coming out of the back end of the mine, and then the exploration. And here's how we're going to start small and go big. So the deliverables are first pour, and then next quarter commercial production, and then depending on the financing, exploration. Is that right?
Yeah, in the immediate future, one way or the other, this deposit is going to be explored this year to the amount of 50 to 55,000 meters. It's just a question about scheduling that. And then the other thing is really the first time ever to actually start putting drill holes in some of the regional targets that we have, because it's as you mentioned before, San Albino is, at least from an open pit perspective, a relatively small mine life. Even San Albino is expandable. Las Conchitas will be another one, but we have visibility on finding a multitude of these types of deposits elsewhere on the ground. But we've just been disciplined on how we're targeting this going forward. It wasn't like we had an unconstrained ability to deploy capital. Going back to your very original question about the whole feasibility study, yeah, of course we could have done that, but it required an additional $40 million, not to do the study work, it's to do the actual drilling work in order to get it done, and it required another call it 3 years before we would be in production. So it's a trade-off.
Let me ask you one more thing about the potential upside here. Here's a freebie for you. I noticed the results, of course, at Porireo is 6.7 kilometers away, similar style mineralization. It kind of suggests that it could all be one big system. Do you really think that, or are we really looking at discrete areas, different pits over a 6 or 7 kilometer overall length? The example that comes to mind is Great Bear. When they first started drilling that LP fault,
yep.
And I was thinking, well, the whole thing's not going to be mineralized. There'll be different chutes, right? And maybe they'll get lucky and there'll be several high-grade chutes along this 5 kilometer thing. No, it turns out the whole thing is mineralized. So what is your goal here? This is a big arm-waving question. Do you think those dots 6 or 7 kilometers apart could actually all connect Or are you looking for different discrete, pits or underground zones along that corridor?
So zone, right? Number one. Number two, the type of the reason geologically these veins exist in the first place is to have a series of thrust faults. So basically, what you have is you have a series of veins that, on a reasonable amount of periodicity, do tend to repeat every, using a number 50 to 100 meters here and there. Likewise, there's complicated localized faulting in every part of the concessions that we know about. So yeah, this is not going to be a super pit by any stretch of the imagination. It will be a series of pits, not dissimilar to what we're doing over at San Albino, where you have the West Pit, the Central Pit, eventually the Southwest Pit, eventually 2 or 3 pits to the 3 targets that we have over at Las Conchitas. Maybe there could be 7 or 8 pits over there when all is said and done. Puerto Rios might have like a few pits. The stuff in the central zone. So it will be it's not going to look like suburban Kalgoorlie, right? So this is going to be a series of relatively small pits, but all part of the same orogenic system.
Okay, understood. All right. Well, you certainly have your plate full ahead of you this year. I have to ask you one more question. I always ask everybody this. You have an interesting story. You want to persuade me to put my own hard-earned cash into your stock. How much of your own money have you put into it?
Right. So I own outright just over 11 million shares. I think around 9 million I purchased myself in the open market, right? So from the time that Mako was created.
Sorry, not exercising options, but actually just buying shares on the market?
9 of the 11. So the other 2 were through a fairly convoluted way as part of a predecessor over of Mako. But 9 of those 11 were me going out to the market to buy those shares over the course of the last roughly, I guess it's a little over 2 years, so about 25 months from the time that Mako was created. Likewise, I do have 21 million options, which were granted at the time that I took over as full-time CEO. The strike price of those options were granted at over 100% premium to where the stock was trading at the time. So we're obviously very well incented to get the stock going up. The 2 other large shareholders, Wexford Capital, obviously they have their a very substantial amount of skin in the game over here, and then our second largest shareholder, Paul Stevens, he's doing this from an investment perspective as well. A lot of very well-connected, well-capitalized investors, inclusive of myself, are very much pot committed to this story.
Okay, well, that is an excellent answer. I get it. I have in my mind what to look forward to. So good luck with that first pour, and please do keep us posted on what the Truth Machine turns up at Las Conchitas and beyond.
All right, sounds good. I appreciate it. Thanks, Lobo.
Thank you for watching this edition of In the Pit with Lobo Tigre. If you enjoyed or found value in what you just saw, and you're watching this on any sort of social media, please do hit the like button and the share link. Send this on to anybody you think might be interested. That helps us out a lot. If you're watching this on YouTube, please do hit the subscribe button as well. The number of subscribers helps us get more valuable content to you as well. On the subject of subscribing, I'll quickly say that if you're not a subscriber to our free weekly Speculators Digest, I encourage you to sign up. I promise if you do, we will not send you a flood of daily advertisements. You get one free weekly digest with original research not published anywhere else. Check it out at independentspeculator.com. Thank you and have a great day.